Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, TGIF, everybody, and it's 4th. A couple economic news releases today, but unfortunately, the bad news is that because of the government shutdown, we're not getting our economic data. So, the items that were actually important we needed was the non-farm payrolls for the month of September. Last reading back in August, they had 169,000 new jobs, and the estimate for this month was 185. So they figured there's going to be more new jobs created compared to the last month, and of course, it'll be to be determined as when the government comes back and will release those numbers. Same thing with the unemployment rate. We had a 7.3, and they thought it would remain the same. So again, TBD for the month of September for employment numbers, as the government shutdown is unable to provide those data to the markets. So as a right now the stock market's currently up. It's down from the week. It's not going up a lot, but they're taking their cues mostly from some of the Fed speak that's going on there, which you mentioned here. One of the interesting comments was out there because the data for jobs was not reported. I believe it was Lacker made this comment was most likely we won't have any tapering going on in October data type of thing. So this will be obviously important news with a bunch of other people having speeches and stuff. So the market's kind of taking it on from here. As a result, because the bond market's taking its cues from the stock market. So the last few days, stock market's been down, and with the data and with all the other things going on, the bond market's been kind of uh, taking its cue from them. So as a result, kind of been going mid-range, but also kind of going upwards a little bit. Because as you can see with this range that we've been going of a sideways here for a while now. Now we're reaching to a point where we got the 10-day moving average up here. This has been our ceiling right here. We're coming to a part where we're going to either have to go upwards or downwards. Now, the likely scenario, because we have touched the ceiling a few times and it keeps pulling back, is a good chance we could be going downwards where we could have a little bit of a correction as a result. So be very cautious. It could be next week when this happens, as you can see, this is going up here and we're reaching this point here. So we either got to go one way or the other. We're not going to be able to keep going sideways as the trend lines will kind of push us one way or the other. All right, so be cautious. As of right now, we're down about 9 basis points from where we left off yesterday, or yeah, a little bit higher than that. Down for the day, 9 basis points. We're down about 22 basis points from yesterday, which results in a little bit higher in pricing for interest rates. All right, so you guys have a great weekend, and let's hope that this we get this stalemate removed and get everything running back in order. It's not helping the economy, obviously, with 800,000 people out of work and not being able to draw a paycheck. And it's kind of stirring up the market. So hopefully we'll get this resolved shortly. And meanwhile, I hope you guys have a great weekend. We'll see you guys on Monday. Thanks for watching.